What's going on, investors? Dusty from Investments, and today I want to bring you a little bit of a tutorial or explanation of DeFi. And when I say DeFi, I'm going to go into a breakdown of very stable and relatively safe DeFi, and then I'm going to take you onto the fringes to where we're getting into the more risky DeFi. So first thing I want to do, as always, is we want to give a special thanks to our Patreon supporters. So thank you to these fine people right here. If you would like to join, the link will be in the description. And then we also want to promote the Discord. So growing community here. We got lots of good content. So hop on over on the Discord. Link is also in the description. So before we get into this, I do want to do a little explaining and say that some of this you're probably going to be aware of. But bear with me as I take you deeper and deeper into the degen territory, as they call it. And we'll look at some of these things that are offering interest rates in the potentially millions. And I'll explain. You don't want to jump into these, but it's always good to have a little risk. Scared money don't make money, as they say. So let me get into this. So first thing I want to talk about is the relatively safe project, and this is called Blockfi. And Blockfi is something that your biggest risk is a counterparty risk, as they are going to be holding your coins. However, if you look at some of these rates, you're looking at something like a Litecoin providing a 5.5 annual yield, Bitcoin a 5% yield, and this one interests me the most. You got stable coins like USDT offering 9.3% interest. It's higher than the standard return rate for the stock market. So very good interest rate for a stable coin. USDT is a stable coin, so it should always remain $1. So you're not even exposed to any volatility like you would be with Bitcoin. Relatively insane. So then to take you a step further into the abyss of degen territory, I'd take you into Kucoin. That would be my next option. So we're getting a little bit riskier. Now you're talking about counterparty risk, and you're talking about an exchange risk. If you know anything, exchanges have been known to go defunct in the past. However, I would say Kucoin has been around for a while, and I do have faith in them. I know people question it because it's an offshore account, but I've used them for a couple years now, since 2018, I think, since they first started, and I haven't had any issues. I don't keep a lot of money on there, but I wouldn't be really opposed to it too much. So what you can do on Kucoin, and you can also do this on other exchanges, but what you can do is you can loan your crypto to margin traders. So a margin trader is someone that has to take a interest loan to either go long or short. They have to put up a certain amount of collateral, and it's an algorithm that makes sure that you are always to get your money back. So there's not really much risk there. I've never heard of anyone not getting their money if someone got liquidated. So basically you're helping liquidity for margin traders, basically. And for that, you earn an interest rate. And these are relatively low right now, and I think that's due to the nature of the market right now being so down and out. But if you were to look at this, okay, you're looking at 5%-ish on USDT. In the past month, I've seen up to 50%, and I've seen probably an average of around 20 to 30% or more. So this is really low right now, and I think that's due to the nature of the market right now. But I mean I was loaning them out, and I just had the auto lend, so it was very passive, and you just put your amount in there and I auto lent it out, and I was getting like 30 to 40% off of almost everything. And you can set the duration. You can do either 7 days, 14 days, or 28 days, whatever you want. And you can also set your daily interest rate. Otherwise you can just do auto, and it'll auto lend out whatever is at the active interest rate. And you can see currently it's way low, but like I was saying, within the past month I've seen 50% on the annualized return which is insane. You know, you're not going to see that in traditional markets. You're not going to loan out your money for 50% annual. They do have other coins, so if you do want to hold some other things, okay, you can get 2.5 for your Bitcoin. Again, relatively low compared to what I've been seeing. But you know, you could basically park your money here and potentially earn something off of nothing if you're just leaving it. So it's a good little option for someone that wants to take more risk with their money, but not too risky, and potentially it just passively make some money. And you can auto lend on all these. I'm just pulling this up. Okay, BNB, look at this, 21% annual return. So this is more in line of what you see. And I would imagine different coins fluctuate, you know. It all depends on where the market is. So like I was saying, on USDT, man, I was seeing 50% loans. I saw a couple 60% go out. I didn't get any, but that would have been nice. Granted, I also didn't have a lot of capital on there, so not a big deal. All right, so let's take you a step further into the degen territory. And now we're going to get into what I would call or classify as the riskier DeFis. PancakeSwap being a little more stable here. However, it's still pretty risky. And you're going to find these on all sorts of different chains. PancakeSwap happens to be on the Binance Smart Chain. There's Uniswap, which is the most widely known swap exchange on the Ethereum network. There's QuickSwap, I believe, is the one that's on the Matic network. And I mean, each network kind of has their go-to resource for swapping these. But PancakeSwap is the most commonly used for BNB network, Binance Smart Chain. And I particularly like DeFi on BNB network or Polychain just because the low gas fees. When DeFi first started out, it was pretty much only on Ethereum. And Ethereum has just become unusable right now. So not a great play to get into DeFi on Ethereum just due to gas fees. So this is why we're doing most of our stuff on Binance Smart Chain and Polygon network or Matic network right now. But here's where we're going to get into this territory. So typically on the bottom left, you'll see the coin's price, and this is the native coin. So the native coin to PancakeSwap is Cake. So what I'd like to think of is each one of these sites is going to have their own native coin. And it's going to fluctuate. It's going to not be a stable coin. It's going to have its own price. So, I mean, you can pull up a chart of this price. Not a big deal. They're all pretty much have their own charts. So, I mean, you could go to something like Kucoin, which I've been using a lot of lately. When you get into this DeFi, degenerate coins, you use that a lot. Something like Cake. PancakeSwap token is Cake and $18. And you can see the history of Cake. Typically with these DeFi projects, you want to see something stable or catch it on an uptrend. And I'll explain why in a minute. So let's go back to PancakeSwap and I'll explain what we're going to be doing here. So I'm not going to do this on this one. I'm going to show you on Panther what you actually have to do for the steps. But I just wanted to show you PancakeSwap because it's a little more stable than some of the other ones. So what you are going to be doing is you got a couple options here. You're going to come over to farm. What you would be doing is you'll be providing liquidity for these market pairs, meaning that if someone wanted to trade BNB for Cake, they would use your liquidity to make that trade. So what you would have to do is you would have to stake equal parts BNB and equal parts Cake. There's no way to stake non-equal parts. It automatically makes it do equal parts for you. So what I would have to do in this case is I would have to buy some Cake since I don't have any. And then I would have to buy some BNB if you don't have any. And then I would have to stake equal parts. And I'll show you that later in Panther Swap. But you can see there's multiple different pairs here. Different ones have different APRs. So for instance, Cake/BNB offers a 57% APR. Cake BUSD, so Cake and Binance stable US dollar, offers 155% APR. Now, I want to tell you we're more into the degen territory on this, scale of safe to high risk, because you're exposing yourself not only to counterparty risk where you have your money locked up with someone else, but you're also exposing yourself to the price volatility of Cake. So with providing liquidity, if Cake were to tank, your liquidity would try to readjust to the price of that, and your equity in both of those would potentially tank as well with it. It wouldn't be on the same scale, but something to be aware of. It's called impairment loss, I believe is what it's called. And it's another layer of risk that you have to worry about when you're doing these risky DeFis with volatile coin prices. That's why I said you're looking for more stable ones or ones on an uptrend, because you don't want to be on the other end. You don't want to be in something that's tanking in price, because you're potentially going to be rebalancing, and then if you go to sell this Cake and USD liquidity pair, you're not going to get as much back. So when you're providing this liquidity, one of the things to know is that what currency you're going to be getting paid in. So typically you get paid in the native currency of these coins. So in this case, if I staked Cake/BNB liquidity, I would be earning Cake. So I would get paid in Cake, and I would get paid at this interest rate. So if I staked $1,000, I'd typically be making 0.09 Cake per day. So hopefully you're with me so far. There's a couple other things I want to show you. So before we even get deeper into this degen territory here, I want to show you the pools also. Typically you see the farms, and then you also see pools where you can also stake your Cake to earn an APR. This, you're not providing liquidity, you're just staking. And I think what this really does for these sites, and I could be wrong on this, I'm not exactly sure why they offer this on a lot of them, but I think it's just so people aren't immediately selling. So they offer this as a means to lock some of those funds up. Could be wrong on that. All right. Then a lot of them have their other offerings on the side, like some of them have lottery, some of them have NFTs, some of them have games, so all sorts of different stuff. Now I'm going to take you to Panther Swap. Panther Swap is a newer version of pancakeswap, also on the Binance chain. So I'd say a little less time exposure on this, so it hasn't been around as long. However, it's still pretty stable and good as far as the degenerate DeFi products. So again, we're in pretty high risk, but let's start looking at things like the farms, and I'm going to start showing you how to actually do this here. So here we go. We got Panther/BUSD is offering a 779% APR. Panther BNB 673% APR. Some of these offer non-native staking pairs, but you still get paid in the native token typically. So for instance, this one on Panther, you can stake BNB/BUSD. So you provide liquidity for this market, BNB, BUSD, and you would stake it here on Panther Swap, and you potentially earn this APR. However, a lot of times they have deposit fees or withdrawal fees, and typically they're shown right here. Let me see if I can find one that has one just to show you here. Okay, so something like this. You could stake your ETH here, and you'd have to pay a 4% deposit fee. All right, now let's go back. So one of the things I also wanted to show you was these APRs drop depending on how much total liquidity is locked up. And I'm not sure what other variables are taken into consideration. Typically you see them start at like astronomical high APRs, and then they drop over time. I'm not sure what the algorithm is that makes that situation happen, but something like Pulsar, the APR is going to start super high and it's just going to go down. And look at the liquidity in this pool is so low. So as more and more people join this, the APR is going to drop drastically. So let's go back. All right, so now we're going to do Panther. So let's say, for instance, we want to do Panther / BNB to take advantage of 675% interest rate. So what you're going to do is you're going to go to trade and you're going to do exchange. I like to right click on exchange and open a new tab just because typically it opens pancakeswap because pancakeswap is the go-to. So then from there, what I would need to do is you need to have equal parts Panther and equal parts BNB. So I'm going to buy, let's say 10 Panther. I already have 9, but let's just do this for fun. I'm going to do less just because I don't really want to get into this pool again, but I'm just doing it for the example. So I'm going to buy 5 Panther so that I can stake BNB Panther pair. So I'm going to swap some BNB for Panther. And I'm using MetaMask for this. Sometimes if there's congestion on the BNB network, you might want to raise your gas price up to like 6 or 7. Otherwise it displays your fee here, and I'm going to confirm. If you're not familiar with MetaMask, I did make a video. I'll link it in the little eye thingy or whatever the hell. I made a whole video tutorial on how to set up MetaMask and how to transfer BNB into it. So how to set up your MetaMask for the Binance Smart Chain. All right, so I bought my Panther, right? So now I need to stake equal parts Panther and equal parts BNB. So what I'm going to do is I'm going to come over to liquidity. Typically you see that on the left. This one happens to be right here, but I'll go back just for example. And I'll go to the main page, open a new tab, and I'm going to add liquidity. Now I'm going to need BNB Panther and BNB LP. So what you're going to do is you're going to do Panther and BNB, and I'm going to do 5 Panther, and it will do the auto calculation to set you equal parts BNB. So there you go. I just clicked anywhere and it's set. Here's the equal parts to BNB. And what I'm going to do is I'm going to hit supply. Now this is one I've already confirmed. Sometimes you have to confirm this contract. So MetaMask will appear and then you'll have to do a little fee and then you'll have to hit supply. So I'm going to confirm my supplying. I'm just saying there might be another step in there where you would just confirm it, wait for that transaction, and then you'd have to do the supply. So I got a confirmation here. So now I have my LP token. We'll wait till that shows up right here. And what I have is Panther BNB LP, right? So I just traded my 5 Panther and equal part BNB for 0.1569 LP tokens. So now you come back to your pool, and what you'll have to do is you'll have to click on the one that you want to stake it to. I've already been in this pool, but you would have to approve the contract, just showing you this for example, and you'd have to hit confirm, let that transaction go through, and then it'll look like this. And what you can do is you can stake. And here is my LP that I bought. So this is my Panther / BNB LP. You'd hit max or however many you want to stake, and you'd hit confirm. And then I'd confirm my transaction. So I'm now staking my 5 Panther and equal parts BNB, and I will start getting paid in Panther. Some of these have a harvest lockup. So for instance, I'll be getting paid in Panther on this site, but I can't harvest until this 2-hour timer is up. Not every site is like this, it's just some of them. Okay, so now I want to take you into a little bit of troubleshooting before we get into even more of the high risk degen DeFis. So a lot of times when you're going to exchange or liquidity provide, you cannot just select a currency and find the currency on there. So what you have to do, and I'll do this on pull for instance. Let's say I want to do this on pull. I'll go to exchange. I always do right click, open a new tab, so it opens in the new tab so it doesn't change me. And this one's opening pancakeswap. So what I like to let it do is I like to let it load, and a lot of times it'll load both tokens, okay? And then you're gonna click I understand. What this is it's saying, hey, anyone can make a token. So you need to check these addresses to make sure that the token you are purchasing is the correct token. And basically you're looking at the contract address. So you would compare this address to the one posted on the Pulsar webpage or Twitter or whatever. So I'm going to hit continue. And now it's here. Now it's loaded into there so I could exchange my 32 BUSD for one betapulsar right now if I wanted. I'm going to take you even a step further and say, okay, let's say I want to exchange and it didn't load up. So I didn't get bpull. So what you could do is a lot of times on the left side, you can go to info and you can open the docs. And this is how you're going to learn about these projects. You're going to go to their documents and you're going to read all these details. I'm actually going to cover betapulsar in a later episode here. I want to do it before Friday because that's where their farming starts. So I'm thinking about maybe tomorrow or Thursday. So look out for that video. It's coming here. And what you're going to do is you're going to look for the contract address. So I'm going to scroll all the way down and look for the contracts. And then you're going to take this address and you're going to copy it. Very important that you make sure this is the correct address, that you trust this site. And what you would do is you would paste it in here and it should come up. And there you go. So now I got bpull that way. I only show you that because a lot of times you won't get it where it shows up right away. So sometimes you got to copy and paste the contract address to actually get it in there. I showed you pretty much the range here that we go through. More safe to more risky for DeFi projects. Now here's where we get into how we're finding these risky projects. This is called the Rug Doctor Farm Diagnosis List, and this group of people is searching through all these different DeFi projects and they're labeling them with what they see. So okay, for instance, Polycrab is marked red. They saw some weird low effort vault project with proxies which can change to malicious ones. Needs a closer look. The biggest concern with some of these sketchy projects is they could just pull the rug out from underneath you and walk away with all their money. I've been in one where it's been hacked and the contract was so poorly written that someone was able to take everyone's money basically. So it's good to have the auditors look at these. This isn't the end all be all for auditing. Just because it's on this list doesn't mean it's 100% safe. So these are what I would relatively say is high risk. So, but you can see some of these. You're looking at Cinnamon Roll Finance. Okay, this is a new project. Sometimes you'll see these where you're catching it before the pre-sale. So farming for this, remember where we're looking at these high APRs, is going to start in 1 day. Let's see, for instance, when liquidity will be added. Liquidity will be added Wednesday, May 25th. So what I want to do is I want to see how is that liquidity going to be added. So I'll go to their docs and I'm looking for a pre-sale. I like pre-sales. If you can get them at a low price, sometimes they go up and you don't have as much risk then. So let's see the launch. Farming will start on this block. Estimated date, no pre-sale, pre-mint 150,000 tokens for adding liquidity. So there's not going to be a pre-sale, they're just going to start going basically. So you could potentially buy this, you could potentially stake it, but this is how I'm finding them. We're kind of looking, we're looking on the Discord. We got a couple people looking for these projects, trying to find the decent ones, trying to find the gems, trying to find the ones that'll do well. The reason I keep bringing up Pulsar is because, yeah, it's higher risk, but I trust the developer because he's done projects in the past and he's not led us astray, which means he's not going to pull the rug out from underneath us. At least I don't think so, you know. And then he also kept the price very stable on one of the projects, which is absolutely great. With these type projects, if you can keep the price stable while you're earning this incredible APR and you're getting paid, then you harvest that and you're selling what you harvest or compounding it to earn more, or selling what you earn into BNB to get your initial out, it's great. If that price stays, it's absolutely phenomenal because you just keep earning money. So I keep bringing this beta pulsar up because this is the next one, and the farming is going to start on Friday. It's going to be a nice high risk, high reward project to be in for me. But I think that's pretty much all I want to cover in this tutorial for DeFi. Let me know if you got any questions. I kind of blew through it, but I took you through quite a wide range here of beginner, very passive, lower risk, to very high risk, very involved, and you gotta kind of know your stuff. But like they say, scared money don't make money, so you gotta play the game sometime. So let me know if you got questions, leave them in the comments below, or if I said anything wrong, I'm sure I did, not a big deal. Or if you just want to say what up, or tell me about your favorite DeFi project, or tell me about the new gems you're finding, leave them in the comments. Or, you know, join up on the Discord. The Discord's in the link in the description, you dummy. Come on. It's super easy. We got a good group of people here, and everyone's just, you know, looking for these DeFi projects. They all just want to profit too. So no one there is leading you astray, at least currently. But that's all I got. So if you found value in this, leave a thumbs up. I'd really appreciate it. It'd help with the algorithm. Don't forget to subscribe if you want more content like this. You know what they say, all the YouTube jargon stuff. So until next time, later.